Hey everybody, what's up? Welcome in today's video. In today's video, what we're going to go over is market structure 101. So we're going to go over the basics, what's market structure, how we can use it in your trading, and how, most importantly, how to spot a market structure. So if that sounds interesting to you, please do stick with us until the end. Don't forget to subscribe, share with a few friends that you believe the video will be of help to them, and hit that bell notification so that you'll be notified whenever we release content in the future, as we drop big content on a daily basis. We got you. So what's market structure? Market structure refers nothing to more than the characteristics or behavior of a particular market, in which it shows you who's really in control of the market, if it's a bear market, or if it's a bull market, or if it's a bear market, right? Now, how do you spot it? How do you understand what is it, a bear market or is it a bull market, right? Because that's the most important thing. So cool, let me get serious with it. All right, so you can determine that by looking at the market structures, right? There are some things called market structures, in which, for us that use price action, so for instance, in a market, we all understand that the market moves in waves, right? It either starts from below going up, something like this, or it is moving perhaps something like this. So you see these turning points are what we so-called the market structures, right? Because they're not just a point, they're actually a zone. They're actually something like this. So for instance, maybe we can do something like this. They're actually zones, they're actually structures, where if prices reacted from them here, best believe they're going to react on them again here in the future, right? So it's just turning points that are actually turned into structures, right? So how do you actually determine, or how do you actually use these market structures in your trading? There's a storm coming my place, man. Like, it's gonna rain hard. It has already started with the thunder and all that. So best believe it's gonna come down hard tonight. All right, cool. So market structure. The market structures can actually be determined by how the prices are moving, by actually using price action, nothing more but price action, right? So for instance, if markets are moving like this is what we call a bullish market. We call it a bullish market because prices are coming from low, going high, right? They're creating highs. You'll find prices have created a high, a low, a higher high, a higher low, and so on and so forth, meaning a higher high and whatever, right? So this is a bullish market, as prices are creating higher highs and higher lows, as prices are coming from a lower place going to a higher place. Bullish market. In a bearish market, prices will be creating something like this. Meaning, like, prices are creating lows, lows, lower high, lower low, because it's actually lower than the previous low, lower highs, lower low, a lower high again, and so on and so forth. This is a bearish market, right? Now, in the markets, the first thing that you need to do once you open the chart is you need to determine what type of market or what type of trend is the market that you're trying to trade in, right? So for instance, if you're looking at Euro USD, you need to first understand, is it in a bullish trend or is it in a bearish trend? After determining that, you then go ahead and say you are going to look for the trade that's in the trend, because as a trader, there's a phrase that goes that trend is your friend. Yeah, never go against that. Always trade with the trend, no matter what. Always trade with the trend, right? No matter what happens, always trade with the trend. Because the trend is your friend, it can never go against you, right? I'm not saying that you're not going to lose trades again. I'm just saying that you're placing yourself in a position where you're going to lose fewer trades if you do that, all right? So always first determine the trend, and then after determining the trend, look for trades that go with the trend. How can you take trades that go with the trend? Easy. always take trades on market structures. So remember I told you market structures are just the turning points or the structures where markets have reacted to. So for instance here, if we put this as our market structure, we can see here prices came, rejected, broke above that. Came back here, rejected, broke below that. So after you see prices have already created this kind of a, maybe you have a low, lower high, lower low, lower high, you understand like, okay, this is a bearish trend, right? So where are you going to look for a bearish entry? Obviously, you're going to look at it for a trade on a market structure. Never take a trade while it's in between. You'll just be chasing the trade, and most times than not, you're going to lose money. So always take a trade that's going with the trend, right? So for instance, here prices are pushing lower. Look for an entry here. Look for an entry here. Take your sell, right? After the prices have broken below, on the retest, take your trade, pull the trigger, and just sell. Right? Sell that thing and take your profits on the next structure. Always trade structure to structure, because with trades, you never know what's going to happen. Like there's a phrase that goes, anything can happen in the market, right? As a trader, you need to embrace that. You need to embrace that understanding that anything can happen. So for instance, if you take a sell here and then it reaches down here and you don't secure the bag, maybe believing that prices are going to keep on going lower, but this is a support structure and prices can bounce from a support structure. Duh, obviously, because it's a support structure and people are looking to buy from that structure, right? So if prices buy from there, then you're going to be holding on a trade that's losing money. So never let yourself be in that spot. If you take a trade from a broken structure, place your take profit on the next coming structure. Do it over and over and over and over again. Trading with the trend, entering upon the structure retest, taking a take profit on the next structure over and over and over again. I guarantee just by doing that, you'll already be a winning trader. Just by doing that, you'll always be a winning trader. You'll always be on the winning side because you'll make more than you lose. I promise you that. So that's the first thing that you need to look at when you're looking at the structure, where to take the trades, what's the market structure, and all that. So let's look at the charts, man. Let's look at the charts. Enough with the theories, you know. First things first, look at the structure on DXY. Prices came here, rejection. You can see this was a clear structure. Prices broke above that, retest. What happens after the retest? Prices bounce off all the way to the next structure. Right now, prices are creating some kind of a downward trend. As you can see here, we had a high. Prices created a lower high, a low, and then prices created a lower low, and then a lower high, and then created a lower low. So from here, we are actually anticipating to see prices might continue selling. We're just waiting for that entry or that confirmation. Obviously, you can see here on the 4 hours, if we zoom in, on the 4 hours, you see here, we have some kind of a structure. So we'll be looking for how prices are going to react on this structure. If prices are going to die off, or if this momentum is going to die off and give us some kind of a bearish confirmation, then we're going to take a trade to sell with it all the way until this structure down here. If not, and prices break above here, we're not going to take a trade right now if prices break above this, because the trend will still be bearish. Because you can see we had a high, we had a low that's lower than the previous high, and we had a high that's lower than the previous high. So this technically is still a downtrend. I'm not going to buy in a downtrend. That's just being nuts and ignorant and naive. I'm looking for sells in a downtrend. So obviously I'll be looking for sells, but should prices break above here, I'll just be watching it until prices break above here, then I'll be looking for buys. But if it breaks above here and it starts ranging, I'll still be looking for sells. Because we're in a downtrend, right? Always go with the trend. Can never emphasize that enough. So once we zoom out here, as I say, DXY, obviously I'm looking for sells, and you can see how the momentum is kind of dying off after it has reached there. Once I open this chart, remember how it was pushing. Now look at how it's kind of rejecting. So obviously I'll be looking to see how prices will react here. I never take a trade without confirmation, because in trading you may have a bias, right? You have a bias, maybe you want to sell, you want to buy. But if you just take a trade based on that, you're obviously going to be losing more than you're winning. But if you have a bias and then you wait for confirmation to confirm your bias, then you actually have two confluences that are backing you up. So obviously you're going to be winning more than you're losing. So which is the main point of trading? Winning more than you're losing, right? So yeah guys, yeah, that's all I prepared for today, man. If you found this video to be of help, to be of value, please do share with a few friends, subscribe, turn on the bell notification. I was trying to go Spanish, I was trying to talk some Spanish, it went out the window. So hit that bell notification so that you'll be notified whenever we release content in the future. With that being said, guys, I appreciate you taking your time. If you've watched this far, I really love you, man. Peace and love.